Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS webinar for today, Financial Forecasting Package Advisory with Vision. We've had a couple of technical issues getting started. We had a major storm here a couple of hours ago and seemed to affect some things, but I think we're underway now, so welcome. Some people are watching this on social media. I hope you enjoy this presentation. If you have any questions, can you please send me an email, peter@essbiztools.com.au. So what we want to look at today is asking the basic question to start with, is this a myth? And the statement is, accountants are providing a range of services that meet the key strategic partner or trusted partner status. What do you think? You think you do? Presumably most people watching this event are accountants and bookkeepers. Well, let's have a look at what's been discussed in the marketplace. An ex-Deloitte partner and his solvency expert, Eddie Senatori, was speaking in the Accountants Daily Under the Hood podcast a couple of weeks ago and said he'd spoken to 80 accountants and 20 bookkeepers all over Australia, and 75% had indicated that they were the trusted advisor to their clients. That figure is very important. 75% had said they were. And they may well have been, of course, but let's just follow through. There is no doubt that some accountancy firms are delivering an outstanding range of key strategic partner services. Many of them are our subscribers. And they could well have been the group that Mr. Senator spoke to. However, Institute QuickBooks SMB Navigator Report 2025, released about 2 months ago, offers a sobering assessment of some of the very important people, the small business operators, the ones that pay the bills. And they surveyed 500 small business operators, and they were asked to comment on the services provided to them by their accountants or bookkeepers. Now, the services were defined in 3 categories, and that's what the SMEs were asked to indicate. Which of those services is your accountant or your bookkeeper providing? The first one was key strategic partner. They are a key partner in our business, our go-to professional for advice, and they are extremely valuable to our business's growth and success. The category I think we'd all want our clients to tick for our services. Let's look at the next one. A valued relationship. We have a good relationship with them and they help achieve our financial or compliance commitments, but they are not necessarily our go-to advisor. The key words, not necessarily our go-to advisor. The other one was transactional relationship. We have a limited relationship with them, and they are a service provider who provides a straightforward service and not much more. A straightforward service and not much more. I interpret that as basically handling the income tax affairs for the client. So that's the offer, the proposal that was given to those 500 business people. Intuit reports that key strategic partners got 15% of the vote, 75 out of 500 firms. Valued relationship secured 51%, and transactional relationships 34%. So obviously only 75 out of 500 businesses rated their accountants as their key strategic partner or a trusted advisor. Only 15%. That's not many. And I don't think we should take any pride at all as a profession that that's the response which was received from the most important group, the people who pay the bills. They were looking for more services, more information, more contribution, more spontaneous advice, as an SME said to me recently. they were looking for. So why the variances and these different opinions? Why is that occurring? There was an article in the Accountant's Daily on the 26th of August. Accountant calls on industry to address trusted advisor myth. Accountants are struggling to properly service and efficiently help their clients with their cash flow and business operations, which is contributing to the increase in small business insolvencies, Eddie Senator, ex-Deloitte partner and insolvency expert, said. He said accountants aren't maintaining trust relationships when servicing a range of multiple clients. Those comments are very similar that some of you may have heard on my podcasts when interviewing Andrew Geddes, one of the joint founders of the Financial Management Research Centre, and I think Australia's outstanding accounting industry trainer, who basically said firms are servicing too many clients to really offer the additional financial advisory services. But that's probably something for another day. Eddie Senator conducted research at the beginning of 2025. He said to uncover the root cause of why so many small businesses were failing or facing insolvency. And let's just look at the figures, first of all, that have recently been produced by the Australian Small Business Ombudsman, because that offers a very stark picture. 43% of small business operators make no profit. 75% of owners earn less than the average wage in Australia, and they're running a business. So from the 80 interviews that Senator conducted, he made the following comments. Why are small business clients still ending up in financial distress even when they have a trusted advisor? Interesting question. What emerges from his research, he said, was a striking disconnect between what accountants believe they were delivering and what financially distressed clients said they experienced. So we got the 80 accountants and bookkeepers that were interviewed. 75% of them said they were providing an outstanding range of service. A trusted advisor service was the words that Senator used. Whereas the research with actual interviews conducted by Intuit and QuickBooks had the figure back at 15%. It's a big variance. Eddie Senator then made the following comments. A tough reality was that trust wasn't built through infrequent transactional interactions. He's really saying, and I agree with him, that there needs to be more one-on-one discussions with clients to really understand what's driving your clients. Senator continued, trust is built through deep engagements. When accountants and bookkeepers spend time understanding their clients' business, their goals, ambitions, and the specific challenges they faced. He commented that his recent study of accountants shows that, somewhat surprisingly, accountants are still focused on tax accounting, and tax strategies. And unfortunately, the tax return does not help any SME client to improve their business performance. He laid out a challenge, really. One way to test whether accountants are in fact trusted advisor is to ask clients whether they would still have a relationship with their accountant if end-of-year work through some sort of magic wasn't required. Would your clients still come to you because they want your advisory services? I've got no doubt some of them will, because 15% said that your accountants are very valuable in that area. But it's a serious question. I think all this identifies a significant challenge that accountants and bookkeepers face. And Senator said this was the hesitation to address financial issues early, as both clients and professional accountants often waited until problems become severe before taking action. He said by regularly engaging with clients and addressing potential risks early, you establish yourself as a valuable partner who helps guide clients' business in the right direction. Interesting comments made by Mr. Senatori. The research conducted by Intuit QuickBooks has clearly identified that according to a significant sample, 500 is a significant sample of SME operators, accountants are not providing a range of services that meets the key strategic partner status. I suppose it begs the question, is that status definition too high, too hard, unachievable? I don't think so, but perhaps some accountants do think so. Be interested to hear your comments. So what can accountants and bookkeepers do to address these problems? I don't think any of you would agree we can just let it sit where it is. The report from QuickBooks has really opened up a lot of questions. At ESS BIZTOOLS, we've had a good serious look at what Intuit QuickBooks had to say. But we've been working on this problem for over 20 years because I think it exposes that businesses need financial, commercial, management, accounting advisory service, in addition to the preparation of their tax return. But the tax return doesn't help them run their businesses more efficiently. Financial, commercial, management, accounting advisory services, I submit to you, will help them run their businesses more efficiently. And the first problem is that businesses, large and small, normally operate for 52 weeks of the year, and they need financial input on an ongoing basis, not just at the end of the financial year. Indeed, in a larger company, and probably not much larger than some of your clients, they employ full-time accountants. They work the whole year, probably not 52 weeks, take out 4 weeks annual leave and take out a bit of sick leave and all that, but they're there probably for 46 weeks of the year working in the business. Compare that to what happens in your SME clients. I assume they haven't got someone there all the time. If you're supplying that service to them at present, that's great. Congratulations. But unfortunately, the majority of accounting firms are not providing those services, even though the statistics from the Ombudsman are highlighting there's a lot of need for them. The preparation of an annual set of accounts and a tax return doesn't help them. I've already said that, so we won't. It all starts with the business owner's vision. What is their vision? What do they want to achieve out of their small business? I think we should be encouraging them to sit down and take a dreaming room approach, lock their door, no one to interrupt them for a few hours while they sit and think about their business. Now, within ESS BIZTOOLS, we've got some key questions that you could supply to your clients for them when they sit and dream how they're going to run their business. What's their target? What are they trying to achieve? Because everyone that goes into small business needs to realize there are a lot of challenges, and they're basically doing it with one or two key people. They're hiring staff, and hopefully over a period of time that staff members can undertake more work. But initially, all they've got's themselves. And there's somewhere between 30 and 40 key management roles in every business. But in a small business, most of them seem to get allocated to one or two people, basically the owners. And that's why a lot of things don't get done. So sitting down in the dreaming room, as promoted by Michael Gerber, is a very worthwhile approach. And if your clients haven't done that, even if they've been in business for a few years, it's not a bad strategy to now think about. The start of a new calendar year is just around the corner. Why not suggest they do it in January, February? Sit down and think about what's going on. Have they created systems for every aspect of their business? What changes do they want? What do they visualize for their business? What challenges are they confronting? How are they going to get there? There's a need for the accounting team to be more closely involved in the development of activities, in understanding the systems, in understanding the client's business, far more than what you would if your traditional role has been the preparation of an income tax return for your client. You need to know all the aspects, who's authorized to do various things, what the policies are, where the skeletons are. You need to understand your clients 1 inch wide but a mile deep if you're going to give effective advice as a key advisor. You don't need that knowledge when it comes to preparing the tax return. Some of it could be described under key performance indicators and business metrics. How often do you review those key statistical data when you're preparing the income tax return? Gross profit percentage, maybe the turnover percentage, net profit percentage. Yes, you probably give them that. But there's a whole range of other shrinkage. What was that? How do they compare with benchmarks? And compare them to the top 20% of the industry, not the average. We utilize and recommend the tax fitness benchmarking packages, which supply you all the information you need to understand that process. So after undertaking that initial review and understanding where the business is, how it operates, who's in control, who's got authority to do what sort of delegation has taken place in the business, there then needs to be a business plan prepared, but not you going off in isolation and preparing a business plan. I think it's essential that the leadership team meets with the directors, if there's additional external directors. And what we supply our subscribers in ESS BIZTOOLS is detailed questionnaires so that you can be asking the questions. You facilitate the process, but not be the sole preparer. Because at the end of the day, I believe it's vital that the leadership team sign off on the business plan, that they've helped develop it, their ideas are implemented in it, that they've debated it, because they're the team that's got to implement it. And if they haven't got that ownership of it, a lot of them don't get very enthusiastic about meeting the requirements or comparing actual performance back to what was stated as being the targets in the business plan. Financial forecasting is very important. Some people say that's the most important aspect, but I think you've got to start with the initial review of where the business is, what's involved, what needs to be done, what's been committed. There may have been commitments made to the local council that certain monies are going to be spent on doing some sort of rectification work that needs to be factored into the funding, but it's not an everyday occurrence. It might be in the back of the head of the owner, but really it's never been discussed. It needs to be in the forecast. So the financial forecast, which comprise predictive accounting reports, budgets for all operations. I believe that is very important, that if your client's running 6 business operations or 26 business operations, there's a profit and loss account, a budget item for that entity, so that the results can be analysed in detail just for that activity. If you put it all together in a consolidated profit and loss account, you lose that ability to scrutinise what's happening in a particular operation. And I've seen some real disasters when that's occurring. Everything's just going to the one P&L account, and then suddenly the bottom line result coming out of that consolidated P&L account looks very sick. It might be a big loss. And everyone starts saying, well, it wasn't my fault. I don't know where this has come from. There's a real witch hunt. And it is difficult to isolate the cause. I've been involved in a number of those sort of exercises. It can take a long time, a couple of weeks, to go back and try to reconstruct what was happening. The biggest one I had about 18 separate sections of the business. And the CEO's favourite one was the one we ultimately proved was where the problem had occurred. And it was a trucking type business, and there'd been a change made in the travel routes because the tear weight of a bridge had been changed by the Main Roads Department, and it now created an extra 300 kilometres both ways. They were a long trip, and there were about 12 trucks a day doing those trips. And no one told the CEO, who was the man that set the price negotiations with the client. No one told him. I find it unbelievable every time I tell that story, but no one told him. Until finally we identified that's where the problem was, obviously in that area. That's where the loss was. What was causing it? There was a lot more petrol being used, a lot more oil, motor vehicle repairs. What's going on? The first thought was that trucks were being used for phantom runs by dishonest employees. Thankfully, we removed that thought because we did a bit further investigating, and someone just opened up and said, well, you changed the pricing when the bridge was ruled out, didn't you? And the owner of the business looked at him and said, what are you talking about? And that's when it all come out. But this had gone on for nearly 10 months. So the costs were quite staggering. So out of all this, we get the financial interpretation of the business plan. The rhythm of meetings is very important in a business. Your business, my business, and especially your clients' businesses. I think it's important that you try to establish that rhythm, daily, weekly, monthly. I'm primarily talking now about the leadership team, but it can cover other activities, of course, other people, other teams. Daily is basically what went wrong yesterday. If we got something to fix, if everything went okay, there was nothing to fix, that's good, the meeting's over. It's really to highlight what needs to be zeroed in on. The weekly meeting looks at the weekly performance and profitability reports, which I strongly suggest that for each of your clients, you implement that policy so that each week every business activity is analysed. That's what big companies do. It's what Woolworths, Coles, IGA do. I had a look at the Woolworths system, and I've consulted for some of the franchisees in IGA to look at their system. Their general manager of a store has financial results Monday afternoon, Tuesday morning for the week ending on the Sunday. So they may have 40 to 50 departments in some of those big stores. They can sit down with the butcher shop manager or the fish shop manager or the hot bread shop or all the sections and look at their figures, their gross profit percentages, their sales, their labour to turnover, their overall contribution to the overheads of the business. How does it line up against the budget? How does your SME client, that in some cases is sitting only 20 or 30 metres outside of a major supermarket, the butcher shop, the hot bread shop, the fish shop, who are competing with those businesses being operated by the big businesses giving the results back to their team every week? I think your client needs that also because they're competing with not enough information. And if they're relying on the annual tax return, they've got a real problem on their hands. And that's what the statistics released by the Ombudsman prove. And then at the end of the month, we got the monthly financial accounts, comparison to budget, key performance indicators, and business metrics. And again, if there's variations, they can be immediately investigated. So the monthly financial reports analysing the key performance indicators, business metrics, comparison to budget. One of the big things that businesses need each month, though, is the 12 months cash flow overview. Is there problems ahead? Should there be some pre-planning taking place now? of debtors' days outstanding slipped out to 48 days. There needs to be concerted effort to get them back as close as possible to 30 days. Because if it continues that trend, in 6 or 7 months' time, the forecast would be showing there's going to be potential cash flow problems. Needs to be fixed. It might be a problem with investments in work in progress. Invoices are not being raised quick enough. The investment's going up, but we're getting no money in. And this process needs to be repeated month by month to give the overall strategies for the business. So the overall package that ESS BizTools has produced covers everything that I've just talked about, gives you the systems to implement that, together with a whole range of other products: buying a business, cash flow management, financing arrangements if you decide your client needs to raise capital, crowdsource funding, equity raising, early stage innovation company, Section 708 of the Corporations Act. Debtors management. Debtors management's a huge area for many SMEs. Setting prices for trades businesses to get the charge out rate that, combined with the productivity percentages, will achieve a profit target. The similar system applies for professional service firms, including accountants. And then we got the retail or wholesale business, which is looking at a slightly different operation, aren't they? They're buying products which can fall into different categories. Some are stars, some are cash cows, some are problem lines. That's based on their volumes and their markups. But the whole exercise is what's got to be done? What sort of composition of stock should a business have if it's going to achieve its overall profit target? Research and development, a major activity. Over 7,000 SMEs were involved in claiming the research and development tax offset in 2022-23. Be interesting to see what the figures were in 2023-24. And people aren't doing that just to get a tax benefit out of it. They're doing it to try to invent some new products and services, some valuable resources. So tomorrow and Friday, we're launching our business incentive type program, where we're going to look at the process that goes through on the innovation journey, which really starts with research and development. So I hope you are able to look at those items. And we've got a special webinar on the innovation journey on Monday at 11 a.m. AEST. So the key components within the ESS BizTools financial forecasting package, we think will help you to introduce a level of services which will enable your clients to give you a key strategic partner rating, because you'll be supplying them with real accounting services to assist them on their journey. So let's look at the ESS BizTools offer to you. It's very important. So you can visit our website, essbiztools.com.au, click on packages and pricing, and you can click on financial forecasting. There you will be able to look at all aspects of the product packages included within the financial forecasting package. There's about 30 of them, which will help you to deliver this range of services. You might not use all 30 of them in some years. You won't use them all for every client, I can assure you of that, but they're there so you've got them. And the system also includes training material for your team. And we have training packages 10 months of the year you receiving training. So there's 10 separate training sessions on a group basis we deliver by Zoom. And you also receive marketing tools. We produce a newsletter each month called Business Plus Newsletter. which is a promotional tool that you badge and send to your clients. And we are writing articles for SMEs. There's somewhere between 4 and 6 articles in each edition, and it's commenting on different aspects of running a small business that you can help your clients better on. So debtors management. We explain how debtors management operates. MYOB conducted a survey 18 months ago and found that a lot of people were assuming that they had to give credit to anyone that asked for it. Not right. They also were assuming that everyone would pay them in 30 days. That would be wonderful, wouldn't it? They also assumed that if they went and opened an account with a supplier, they'd be automatically given 30-day payment terms, and got a shock when they found that they had to make a payment up front when they placed their order. And there's a few other issues that MYOB identified as well. But what all this is saying is that those people had obviously not received proper advice in the first place. They hadn't gone into the dreaming room situation that Gerber promotes in his series on the E-Myth. We as advisors need to be bringing this to our clients' attention. So a lot of these articles are within Business Plus. So over a year, there's 70 to 90 articles covering all aspects of a business. People thinking about going into a business, recent starters, 12-month operators, people that have been in for 2 years, and others who are now thinking about succession, thinking about selling, thinking about buying other businesses, thinking about doing research and development activities, want to know what the innovation story can be all about, their business. Got the resources there for you to be their key strategic advisor to advise them on this journey. We got samples of webinars that you could look at and say, okay, yeah, we can produce some webinars like that. We're giving you the suggested slides and my presentation, but you can then, of course, do your own, because your clients want to see you presenting. And there's product summaries that you can send your clients. We've got little packages we've produced for various aspects. Someone buying a business, selling a business, looking at succession planning, wanting to operate a family business and bring the whole family into it, and so on. We've got material. You can just send them out. Give them an idea what they're going to be getting. And this is all about communicating to your client that you can offer a great range of strategic advice to them. Because unfortunately, many SMEs are still of the opinion that all accountants do is prepare income tax returns. Training, there's an initial 13 modules in the package that you get from day one, which is all set out with notes and short videos for your team members to work their way through to get a better understanding of what's involved in offering advisory services, training, commercial, management, accounting services to your clients to assist your clients to run better businesses. And we have 10 group training presentations, which I think I mentioned just a while ago. We prepare the webinar type presentation. Sometimes it's a podcast type presentation on various aspects. We ask our members to let us know what packages they'd like presented, but if we don't hear, we work through our program so that there's information being given to your team to improve their performance. Now, our special Black Friday offer. Yes, it's Black Friday in a couple of days. For the 12-month, this is available under the 5th of December, so that's Friday week. It's 12 months upfront subscription, incorporating a 75% discount. We were originally going to offer a 50% discount, but then the discussion turned to the report from the Ombudsman about how bad SMEs were going. And someone rang me and said, we need accountants to be more proactive in offering services. And I'm hoping that an extra 25% discount on our packages will assist you to get started to deliver these services to your clients. Now, I'm not letting you go out and start with 20 or 30 clients next week. I think you'd start with 1 or 2 and just start slowly working with them, get them started, look at the return on investment you start making, and then move on. So your investment for the financial forecasting package, which was what I've been discussing today, is only $1,050, including GST, for 12 months. $1,050. You've got to be able to get a return on investment on that amount. I think every accounting firm could use our system at least 20 separate times in a year to assist SMEs if you started thinking about it. Debtors management, personal property securities register, setting up their systems because they've bought a business, research and development type activities, their budgets, their cash flows, their business plans. There's a lot of work that can be undertaken. And we have it all covered in our system. And each year we write more material. We've currently got about 8 different packages underway. And as we finish them, we introduce them into the package. And if your subscription's still got 8 months to run, we got the use of that for 8 months. Hopefully at the end of the 12 months, you're going to renew your subscription, you get access to that and the new material we produce in the following year. The advanced package, which is the middle package, is $798.50. We got funny amounts now when we're just taking 75% straight off. And the starter package, which is primarily designed for bookkeeping firms who want to start venturing more into advisory services, which I think they should, and for accountants who have been handling a lot of wage earner, salary earner tax returns and very small SMEs who are listening to what the former tax commissioner, Chris Jordan, had to say about changes that are occurring and now wanting to get started. You've got to start somewhere, so you can start with the starter package. You can upgrade your subscription at any time during the year. We'll do a pro rata type adjustment. So if you start with a starter and you say, oh, okay, I've used that, but I've got clients asking me for other things, and I can see on the screen that you've got them in the system. Can I get them? Well, sure you can. Does cost them another fee, but we'll pro rata it and get it to be a working arrangement with you. So the starter package is only $327.25. You've got to be able to get a return on investment on that. If you don't get it, you haven't used it. That's as simple as that. And if you don't intend to use it, please don't subscribe, because I don't want to have people who are subscribing and not using. We want this to be an active. It's an event to try to help SMEs to run better businesses. So your return on investment, I think, will be very attractive, especially on these prices. They're attractive on our original price, but when I've discounted them by 75%, you've got to get a return. And the other significant benefit in all this, I haven't really mentioned, but every time I talk to any of you accountants, not so much the bookkeepers, but accountants, I get feedback that you've got trouble getting staff. Now, I know how I used to be the senior partner of a firm. I know how difficult that can be. This type of work will help you attract talent and retain talent because they'll be undertaking interesting and challenging work. I know there's still got to be tax returns prepared, although some of our subscribers are cutting back on their tax return work because they're convinced that advisory services has got a lot of opportunities for them. So think about it. Talent attraction and retention is made easier by embracing financial, commercial, management, accounting, advisory service delivery to your SME clients. So please visit our website, www.essbiztools.com.au, click on packages and pricing, and then click on the product package you would like to look at in detail. And the main one that I've been referring to today is financial forecasting. But you can look on the other packages if you wish, the starter package and the advanced package. You can subscribe straight away if you wish, and you'll be able to start using the package that you're subscribed to the next day. I think you should be able to earn income within a week of your subscription. If you put your team through the training process and then started to really analyze your clients, who can you talk to about this? Think about it, please. If you've got any questions you'd like me to answer, please send me an email, peter@essbiztools.com.au. I hope everything goes well for you during Black Friday. I look forward to hearing from you. And we're committed as accountants to help deliver developing services for accountants to enable you to be able to confidently offer advisory services to your clients. Stay safe. Have a great day. Goodbye. And have a great day. Thank you. Goodbye.